Hello everyone, welcome back. I'm Mark Blunden with eXp Realty serving Laguna Woods Village and South Orange County. If you're buying, selling, investing, or simply keeping an eye on the market here in Laguna Woods Village, this is the video for you. Every month we analyze the latest numbers, separate the headlines from the reality, and help you understand what is actually happening in one of the most unique housing markets in Southern California. Because Laguna Woods is not one market, it's really several markets operating behind the same gates. Different mutuals, different buyer pools, different ownership structures, different price points. And if you want to make smart decisions as a buyer or seller, understanding those differences really matters. So let's dive into the June 2026 data. If you're new here, welcome to Living in Laguna Woods Village. On this channel, we talk about what life is really like here in Laguna Woods Village, from real estate and market updates to lifestyle, amenities, hidden gems, and everything you need to know before making a move. If that sounds useful, I'd love to have you subscribe. Now, let's get into this month's numbers. Here are the top things to know from June's data. First, inventory moved higher. Active listings increased from 200 to 223, a level we haven't seen since November 2020. Buyers now have more choice than they've had in several years, and that continues to shift the market towards a healthier balance. Second, speed stayed basically the same. Days on market increased only slightly from 35 to 36 days in June. Even with more homes available, buyers are still moving at a healthy pace when they find the right property. Third, pricing rebounded. The median sales price moved from $380,000 in May up to $469,000 in June, bringing it much closer to where it was in April. Remember, May included an unusually large number of towers sales, which significantly pulled down the village-wide median price. June's number is much more representative of the broader market. Fourth, negotiation loosened again. The percentage of original list price received slipped from 96.9% down to 96.2%. Buyers continue to gain a little more negotiating leverage as inventory increases. Fifth, closed sales eased slightly. Closed transactions declined from 59 down to 54. While that's not a dramatic change, it does suggest that buyers are taking a little more time before committing. And finally, month supply of inventory increased from 4 months up to 4.7 months. Taken together, June paints the picture of a market that's becoming more balanced. Buyers have more choice, sellers have more competition, and strategy is becoming increasingly important for both sides. Now, let's take a deeper look at inventory. Active listings increased from 200 to 223. Now, here's what I really think is important. One of the questions buyers ask me most often is, Mark, are there actually more homes coming onto the market? And the answer is yes. We've now reached inventory levels we haven't seen for almost 6 years. But that doesn't automatically mean prices are going to be falling. It simply means buyers have more options. And when buyers have more options, they become more selective. They're comparing locations more carefully, comparing floor plans, comparing views, comparing garages versus carports. They're comparing remodeled homes against original condition homes. They're taking a little longer before making decisions because they know another property may come along next week. If you're a seller, this is where presentation becomes even more important. Pricing correctly from day one, preparing the home well, decluttering, cleaning, staging where appropriate, and marketing effectively all become increasingly valuable. Buyers have choices, so your home needs to stand out. Now, if you're a buyer, this is encouraging news because you now have a wider selection of homes to compare, which allows you to make more thoughtful decisions rather than feeling pressured to jump on the very first property that you see. Now, here's what I'm telling my buyers. Be patient, the right home is out there. And with inventory becoming available, you have a better chance of finding it. Now, let's talk about speed. Days on market increased from 35 days in May up to 36 days in June. Honestly, I think this is a really healthy number in the month of June. Why? Because despite inventory increasing by more than 20 homes, properties are still selling in just over 5 weeks. That tells us that demand hasn't disappeared, buyers are still active, they're simply becoming more selective. We're still seeing beautifully prepared homes in desirable locations attract interest very quickly. On the other hand, homes that are overpriced, poorly presented, or competing against stronger listings can remain on the market much longer. The average doesn't tell the whole story. If you're a seller, don't panic if your home doesn't sell during the first weekend. Today's buyers are taking more time to compare their options. That's perfectly normal in a more balanced market. If you're a buyer, you generally have enough time to complete your due diligence without feeling rushed. That said, the best homes, particularly those with garages, views, updated interiors, or desirable locations, can still move very quickly. So it's important to be prepared when the right property comes along. Let's look at one of my favorite indicators, months supply of inventory. This increased from 4 months up to 4.7 in June. Month supply gives us a good sense of the overall balance between buyers and sellers. Generally speaking, around 4 to 6 months is considered a balanced market. That's exactly where Laguna Woods sits today. We're no longer seeing extremely competitive conditions of a couple of years ago, but we're certainly not looking at a buyer's market either. Instead, we're moving towards a healthier environment where both buyers and sellers have opportunities. Now, for sellers, this means pricing correctly is becoming increasingly important because buyers have alternatives. If your home enters the market significantly above comparable properties, buyers are much more likely to simply move on to the next listing. For buyers, this is probably the best selection of homes you've seen in several years. It doesn't mean every seller will negotiate heavily, but it does mean you have more opportunity to compare homes and make informed decisions. The key takeaway, neither buyers nor sellers have a clear advantage today. The winners are the people with the best strategy. Now, let's look at negotiation. The percentage of original list price received declined again from 96.9% down to 96.2%. This continues a trend we've been watching over the last few months. Now, before sellers become concerned, receiving more than 96% of your original asking price is still a very healthy result. But compared with earlier in the year, buyers are negotiating a little bit more successfully. And honestly, that's exactly what we'd expect as inventory increases. One thing we've noticed recently is that buyers are becoming more comfortable asking for credits, inspection repairs, or negotiating price after a home has been on the market for a few weeks. They're not necessarily making unrealistic offers, they're simply recognizing that they have more choices. For buyers, reasonable offers with good terms are becoming increasingly effective. For sellers, go into negotiations expecting some discussion. It doesn't mean your home is undesirable, it's simply today's market. Now, here's what we're telling our sellers. Don't focus on getting every last dollar, focus on reaching a successful agreement that allows everyone to move forward confidently. Closed sales moved from 59 down to 54. At first glance, that might sound like demand is weakening, but I don't think that's the right conclusion. Month-to-month changes in closed sales are perfectly normal, and 54 closings still represents a healthy level of activity for Laguna Woods. What I think we're seeing is buyers taking a little longer to evaluate their choices before writing offers. That's consistent with rising inventory, stable days on market, and slightly stronger buyer negotiation. In other words, buyers are still buying, they're just being a little more deliberate. And that's exactly what we'd expect in a market that's gradually becoming more balanced. Now, let's talk about pricing. The median sales price increased from $380,000 in May to $469,000 in June. Now, if you watched last month's Market Pulse, you'll remember I mentioned that May's unusually low median price was largely influenced by an unusually high number of sales in the towers. And that's exactly why I encourage people not to overreact to a single month's median sales price. June's figure brings us much closer to the pricing levels we saw earlier in the spring. Rather than suggesting that values suddenly jumped, I think it's more accurate to say that the sales mix returned to something much more typical. And this is one of the unique characteristics of Laguna Woods, because we have United, Third, and the Towers. All with very different price points, the overall median can move quite dramatically from month to month, depending on what actually closes in each of the mutuals. Now, the key point is this: don't judge the health of the market based on a single month's median sales price. Instead, look at the longer-term trend. Finally, let's take a quick look at price per square foot. This increased from $381 in May to $424 in June. Again, it mirrors what we just discussed with the median sales price. Higher priced homes made up a greater share of June's sales. So naturally, the village-wide price per square foot increased as well. But here's something I always tell my clients. Price per square foot is a useful metric, but only when you're comparing similar homes. Comparing a beautifully remodeled third mutual condominium with a garage to an original condition manor in United Mutual or to a residence in the Towers simply doesn't tell you very much at all. Location, views, condition, floor plan, ownership structure, they all influence value. The practical takeaway: average numbers provide context, but your home's value depends on its own unique combination of features. And that's exactly why we prepare mutual-specific market analyses rather than relying on village-wide averages alone. Hi, it's Mark here. If you're exploring 55+ communities in Orange County such as Laguna Woods Village, subscribe and hit the notification bell. Whether you're moving in 9 days or 9 months, we'll walk you through everything from floor plans to financing, HOAs, and monthly costs. Call, text, email, or schedule a Zoom below. We're here to make your move simple and stress-free. Now, let's go mutual by mutual, because this is where Laguna Woods Village gets really interesting. You can't analyze this community as one giant market. United behaves differently from Third, and Third behaves differently from the Towers. You have different buyers, different ownership structures, different financing options, different lifestyles, different priorities, and understanding those differences is one of the biggest advantages you can have when buying or selling in the village. So let's start with United Mutual. United Mutual posted 21 closed sales during June. The median sales price was $412,000. Days on market was 34. Homes sold for approximately 98% of their original asking price, and the median price per square foot was just under $415. Now, that tells us that United continues to demonstrate what we've seen for much of this year: a healthy, stable, consistent market. One statistic that really stands out is the 34 days median days on market. Despite higher inventory across the village, buyers are still making decisions relatively quickly when a well-priced United property becomes available. And receiving 98% of the original asking price also tells us that negotiation remains fairly modest. Buyers are negotiating, but sellers who price realistically continue to achieve strong results. United also remains one of the best values within Laguna Woods Village. For many buyers, the appeal goes far beyond the price. It's the cottage feel, the mature landscaping, the walkable green belts, the walking trails, the quieter streets, and the unique stock cooperative ownership structure that creates a very different environment from a typical condominium community. Sellers, if you're selling in United, this remains a healthy market, but buyers do have more choices than they did a year ago. Homes that are clean, updated, and priced realistically continue to perform well. Buyers looking in United continues to represent outstanding value. Inventory has improved, giving you more opportunity to compare homes before making a decision. But the most desirable cottages and locations still attract strong interest. So being prepared when the right property appears remains very important. Third Mutual posted 30 closed sales in June. The median sales price was $553,000, median days on market was 35, and homes sold for approximately 98% of their asking price. With a median price per square foot of about $448, this tells us that Third Mutual continues to represent the premium resale market within Laguna Woods Village. Compared with United Mutual, homes here command noticeably higher prices, and there are good reasons for that. Many buyers are attracted by deeded condominium ownership, the ability to obtain financing, larger floor plans, attached or detached garages on selected models, and some of the village's most desirable hillside locations with panoramic views. One statistic I found particularly interesting this month is that Third Mutual homes sold almost as quickly as United homes. United's median days on market was 34 days and Third's was 35 days. Despite the significantly higher price point, buyers are purchasing Third Mutual homes at virtually the same pace. To me, that's a clear indication that demand remains very healthy. Buyers see value in what Third Mutual offers and are willing to pay a premium for it. If you're selling in Third Mutual, buyers continue to place a premium on updated interiors, garages, attractive views, and move-in ready condition. As inventory increases, presentation and pricing become even more important because buyers have more properties to compare. Buyers, Third Mutual offers you many of the village's most desirable homes, along with the flexibility of deeded ownership and financing. While prices are generally higher than United's, today's increased inventory gives you a little more breathing room to compare homes and negotiate thoughtfully before making a decision. The Towers recorded 3 closed sales in June. The median sales price was $152,000, days on market was 85, and homes sold for a median of 77% of their original asking price, and the median price per square foot was approximately $134. Now, whenever we're looking at the Towers, it's important to remember that we're dealing with a very small sample size. Just 3 sales can significantly influence the monthly statistics. That's why I always encourage people to focus on longer-term trends rather than drawing major conclusions from a single month's data. With that said, June numbers do suggest that buyers remained very selective. Homes took considerably longer to sell than either at United or Third, and buyers were able to negotiate much more aggressively. But it's also important to remember that Towers buyers are looking for something very different. They're not simply buying square footage, they're buying convenience, They're buying dining, they're buying housekeeping, they're buying security, they're buying maintenance-free living, and they're buying a lifestyle where many day-to-day responsibilities are taken care of for them. And that's very different from purchasing a traditional condominium in Third Mutual. Now, sellers, if you're selling in the towers, realistic pricing is essential. Buyers have choices, they're taking their time, and clearly communicating the value of the tower's lifestyle is every bit as important as presenting the residence itself. Buyers, if you're looking for simplicity, convenience, a true lock and leave lifestyle, the towers continue to offer something unique within Laguna Woods Village. While the HOA fees are considerably higher than United or Third Mutual, they include many expenses that would normally be paid for separately. That includes dining, utilities, maintenance, housekeeping, concierge services, and numerous other amenities. It's a lifestyle purchase as much as a real estate purchase. If you remember just one thing from this month's Market Pulse, remember this: the Laguna Woods market is becoming more balanced, not weaker. Buyers have more choices, sellers have more competition. Homes are still selling at a healthy pace, and realistic pricing has never been more important. The best homes continue to sell well. The homes that struggle are increasingly the ones that enter the market overpriced or poorly prepared. In today's market, strategy matters more than ever. So here's the clean summary. Inventory continues to rise. Buyers have more options than they've had in several years. Homes are still selling in around 5 weeks, showing that demand remains healthy. Negotiation continues to shift slightly in favor of buyers, although sellers are still achieving excellent prices when homes are marketed effectively, and the rebound in median sales price appears to reflect a more typical mix of homes selling rather than a sudden jump in values. And when we look at the three mutuals individually, each continues to tell its own unique story. United remains stable and offers exceptional value. Third continues to command premium pricing while maintaining strong demand. And the towers continue to serve buyers looking for a maintenance-free lifestyle rather than traditional condominium living. So, what do we expect over the next 60 to 90 days? We think we'll continue to see inventory remain relatively elevated as we move through the summer. That should continue giving buyers a healthy selection of homes and modest negotiating opportunities. For sellers, we believe the homes that are properly prepared, realistically priced, and professionally marketed will continue to perform very well. Those that enter the market overpriced are likely to remain available considerably longer than we've seen over the past few years. Overall, we don't see any signs of a weakening market, but we see signs of a market that's becoming more balanced, more rational, and healthier for both buyers and sellers. And personally, I think that's a very good thing. If you'd like a mutual-specific analysis of your home, or you're trying to decide which mutual might be the best fit for your lifestyle, I would be delighted to help. Every home is different, every floor plan is different, and each mutual has its own unique characteristics. That's why we prepare personalized market analyses rather than relying on village-wide averages. If you're thinking about buying, selling, or simply planning ahead, feel free to reach out anytime. You can call or text on 949-599-4086, email at mark@markblunden.com. I'm always happy to answer your questions. I'm Mark Blunden with eXp Realty. Thank you so much for watching. I truly appreciate your support, and I'll see you in next month's Market Pulse.